Cumulatively for April and May, therefore, compared to the past year, the increase is by 39.2%.
Economy improves on all fronts and the government's coffers are ringing. Indirect tax collections jumped by a whopping 40% in just the first 2 months of this fiscal, and the Reserve Bank makes its highest ever quarterly reserves of over $30 billion in just the first 3 months of this calendar year.
In a bid to arrest the sugar crisis, the government announces conditional loans of 6,000 crore rupees to mills to help them pay arrears to farmers. A disappointed industry calls it mere window dressing and asks how mills with broken balance sheets incur more debt.
The boards of Kane India and Vedanta will meet this Sunday to discuss the potential merger. Sources say the AZL merger could be taken up later and add the income tax department freezing Kane Energy PLC stake shouldn't be a problem.
Major setback for the Maran brothers in the SL Max's case. The Madras High Court refuses to stop the Enforcement Directorate from attaching properties worth over 700 crore rupees.
It's a mixed May for Motown. Car and commercial vehicle sales improved, but weak rural demand continues to haunt two-wheeler sales.
Surana Solar stock goes on a roller coaster ride. Shares perk up after reports emerge. Rakesh Jhunjhunwala has invested in the company. A CNBC's TV18 investigation shows it's into the big bull, but someone with the same name.
ICICI Bank seeks shareholder nod to raise 50,000 crore rupees from bonds, debentures and even equity if needed, but this is just half of what the bank proposed to borrow last fiscal.
As raining freebies, Jet Airways sees a 50% jump in business class bookings after announcing a 25% discount. Air India, which announced discounts for economy class, is now planning to do the same for premium seats. A special report coming up.
Yesterday, we saw the markets multiple times go to that 8,000 mark and bounce back from there. But when you look at the internals, it suggests at least for today, the 8,000 level perhaps could hold.
That's the opening tick. Nifty up 0.02, now 0.07, and the Sensex up 0.1.
What we are seeing here is an unprecedented level of interest in India. Just to quote the numbers, we have a 25% year-on-year growth.
There are talks in the corridors of the government as well as the market that there is a consideration probably in the government, in the cabinet today on the interest-free loan.
If you look at the car sales and the heavy commercial vehicles, both I think are doing strong, especially heavy commercial vehicles.
रोड कनेक्टिविटी और हमारा इसमें जो ट्रांसपोर्ट है वो क्लियर हो, इसलिए करार होने जा रहा है. ये 15 तारीख को भूटान में उसके कैपिटल में होगा.
Steady session for our markets after that gap up opening. We're holding on to that 8,100 mark, a gain of over 1% on the frontline indices. It's been a very good day of trade. In fact, the market has arrested its 7-day selling streak and seen some handsome gains of 350 points on the Sensex. And the Nifty has scored a century today after a long time. So Nifty up more than 100 odd points.
All right, so 8,100 has been reconquered, but is this just a dead cat bounce? Many market experts continue to remain optimistic about the markets in the long term. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nantara. The 7th straight day of green on the screen finally.
Finally, we have something good to talk about. We talk about the equity markets. It's also good macroeconomic data that's coming up later on the show. And a special discussion with Stephen Kinnock, who's a member of the British Parliament. That's on the strike threat of Tata Steel's UK plant. More importantly, he's the MP of Ibarravon, where Tata Steel's plant is situated. So that's coming up for you on India Business Hour.
All right, let's go straight to the market action. After 7 long sessions, we finally have some green on the screen. The MSCI postponing the inclusion of Chinese shares in its index triggered a short covering rally as bulls finally stood up in trade. The Nifty today cracking a century, and it's been a while since I've said that. The index breached the 8,100 mark, so reconquered it. The Sensex also rallied over 350 points, getting closer to the 27,000 level. Mid-caps were not far behind. The index also gained over 1% today. Well, speaking of the markets, here's the big market voice of the day. It's the right time to buy into India. That's the word coming in from Rhythm Desai, head of India Equity Research and Strategy at Morgan Stanley. He also believes that the markets will be positively surprised in the near term. Remember, Morgan Stanley continues to be overweight India.
people want confirmation from the ground, they want confirmation from the indicators. My view is that these confirmation signals will come through in the next 3-4 months. Of course, there are some risk factors, we know them. A lot of these risks are now priced in, given the correction we have had in the last 3 months. And therefore, when these things actually happen, I think the market will be surprised positively rather than the other way around, which is what we've seen over the last 3 months. So to my mind, I think, if I were to make a timing call, which I'm terrible at, but if I still went ahead and did it, I think this is a good level to get engaged in the market. What we are seeing here is an unprecedented level of interest in India. Just to quote the numbers, we have a 25% year-on-year growth in investor attendance. This is on top of last year's attendance, which was a record high. Because remember, last year when we were doing the conference in June, it was just after, 2 weeks after the Modi government had come to power. So the interest in India at that time was unprecedented.
Within this side, there's this unprecedented interest on the India story. Well, now onto the from the equity markets to the currency markets. Persistent dollar selling by banks and exporters, coupled with the weakness in the global dollar demand, has helped the Indian currency gain against the US dollar for the second straight day today. So we saw the rupee gaining almost 10 paise in trade today and finally shutting shop at 63.84. Shireen, we had some big macroeconomic data also coming out today.
Well, that's right, and good news coming in on the macro front. India's current account deficit has come in at 1.3% in the last fiscal, and that's thanks to a sharp fall in the trade deficit. What's also going to augur well with the government, and this really is the true story of the macros today, the forex addition of more than $30 billion in the last quarter of FY15. Lata standing by to dissect those numbers for us. Lata, current account deficit along expected lines, but the real story there is on the forex front, isn't it?
Oh, absolutely. That $30 billion of flows, reserve accretion is the big news, really. It was expected. We saw that coming when you saw the rupee appreciating or holding stable in the face of some dollar strength. But this is what is nice about these numbers is that this 30 billion accretion has come because of capital flows of FDI of $10 billion. That's very strong because FDI is something that plans for the next 30 years, and therefore it's not money that just comes in as a fare with a friend. FII also $12.5 billion, but that's largely known. For the full year as well, the reserve accretion or the balance of payment surplus is as high as 61 billion compared to just 15.5 billion year ago. Again, the full year FDI flow is $32 billion and the FII flow is 41. Again, flows that indicate confidence in the Indian economy and, of course, near-term confidence. Let me come to the quarterly numbers, especially the current account. There, a 1.3 billion deficit is all that we have. Now, that works to just 0.2% deficit as a percentage of the GDP. The only disappointment is some of us were expecting even a surplus number, but then as we got the trade deficit numbers, we knew we may not get to surplus. 0.2% deficit is, as good as a surplus figure or a balanced figure. And the trade deficit numbers have also narrowed for the quarter to 31 billion compared to 39 billion, almost 40 billion even in the previous quarter. Largely this is because crude imports have fallen, but we could have done much better if we didn't have so much of gold imports. The other positives from the current account, private transfers, Indians living abroad and sending money, that normally is a 15-16 billion every quarter. That's jumped to 17.5, which is very good. Again, that's a permanent kind of money. Payments which we make on interest and payments is also a current entry. That used to be about 6-7 billion. That's fallen to about 5.5. Again, that's a very good longer term positive. So for the trends for the current year that you can draw from now, the fact that the current account deficit is narrow is not something that we should expect as a matter of right, because crude prices are not going to remain where they are, and our exports are also falling because of a global slowdown. We have to beware that the current account deficit may not be as good, but it's not a danger spot at all. For me, the big positive takeaway is the balance of payments flow, the capital flows of $30 billion. That is a huge bulwark as and when the Fed hikes rates.
So that forex reserve, the massive forex reserve, should help whenever Janet Yellen decides to increase interest rates in the US. Thanks, Lata, for joining us with that analysis. Well, let's stick to macro numbers. The finance minister is a happy man today. Arun Jaitley says the total indirect tax collections have grown by more than 40% in the first 2 months of this fiscal, accepting the fact that this hike has largely been aided by higher fuel cess, the clean energy cess. Jaitley says the latest numbers show a rise of more than 16% if one were to leave out this clean energy cess. And all these numbers, he says, is an indication that the manufacturing sector is on the path to recovery. Here's more from him.
cumulatively for April and May, therefore, compared to the past year, the increase is by 39.2%. Significant part of this increase is on account of the additional cess that was imposed on diesel and petrol, the clean energy cess. And in comparison to last year, there has been a withdrawal of excise duty on motor vehicles and certain categories of consumable durables. Now, even if the impact of these additional sectors is excluded, in May the increase would be 16.9% and cumulatively the increase would be 12.6% for the 2 months. Now, this is a very healthy growth in indirect taxes, and it is spread over all sectors. It initially indicates a pickup in manufacturing.
Well, that's the Finance Minister. So good news coming in there on the indirect tax collection front. The number looks much larger and it's been driven on account of those cesses, but stripped off that, it is a gain of about 16% odd. The government today announced a one-year interest-free loan amounting to 6,000 crore rupees to help sugar mills pay pending dues to cane farmers. Remember, the arrears amount to 21,000 crore rupees. Industry is unenthused, saying this move is unlikely to yield desired results. Malvika Jain finds out why.
It's an industry reeling under oversupply of the finished product and low prices for the past several months. As a result, the sugar sector is running massive cane arrears amounting to over 20,000 crore overdue to sugarcane farmers. The government today announced a measure it felt would alleviate some of this stress.
करीब 6,000 करोड़ रुपए जो किसानों का गन्ने का भुगतान करना है, उसके लिए सरकार ने उसके लिए पैसा उपलब्ध करने का निर्णय किया है। बैंक ये लोन के रूप में किसानों को देंगी। मिल अपनी लिस्ट तैयार करेगी कि कौन से किसानों को कितना पैसा देना है, और उस लिस्ट के आधार पर ये लोन मंजूर करने के बाद बैंक डायरेक्टली जनधन योजना में जो अकाउंट किसानों के खुले हैं, उन डायरेक्ट अकाउंट पर मिल ने दी हुई लिस्ट के अनुसार डायरेक्ट पैसा उनके पास जमा करेंगे। ये 6,000 करोड़ रुपए ये बैंक की तरफ से मिलेगा, और इसमें जो एसडीएफ है उसमें करीब लोन के लिए 600 करोड़ रुपए 10% इंटरेस्ट के भाव से ये पैसा लगभग 0% पर रहेगा 1 साल के लिए।
Loans worth 6,000 crore rupees would be available to sugar mills. The amount will be directly paid to the farmers, and subsequent balance, if any, will be credited into the mill's bank account. However, the so-called relief is conditional in nature. Loans will be provided only to those sugar units which clear at least 50% of their outstanding arrears before 30th of June 2015. Another important rider is that the government will pay interest for only the first year, after which mills will have to meet the interest payment commitment. Reason why the sugar industry is neither enthused nor impressed? Industry body ISMA says that for starters, many mills having weak balance sheets will simply not have access to these loans.
6,000 crore comes into my balance sheet. I pay off the farmers, and next year I have to give it back to the government or to the banks. So it doesn't really solve my problem. It increases my debt burden. I have to repay after 1 year. And I have said, with your permission, everybody's permission, this is a kind of an unproductive loan. Because finally I take the loan, I give it to the farmers. It's not going for a productive use. So it's only going to increase my debt burden.
The government has announced a number of measures in the recent past in an attempt to resolve the sugar crisis. These steps include an increase in export incentives on raw sugar, increase in sugar import duty, and a reduction in the export obligation time period. However, sugar companies say the need of the hour is more comprehensive reform. Such a move would involve linking sugar prices to the prices of cane. The industry body also feels that a better way to offer temporary respite in the short term would be for the government to build up a buffer stock of sugar, a move that would support domestic prices. In New Delhi, Malvika Jain.
The industry not happy with all of those measures announced. Farmer leaders from different organizations, including NDA ally Swabhimani Kshetri Sangatana, met Finance Minister Arun Jaitley today. They demanded restoring the consent clause in the land bill and a white paper on the status of the land acquired so far. The All India Kisan Coordination Committee, the umbrella union of 65 farmers units, insisted that the government retain a clause of the 2013 Land Acquisition Act under which land not utilized for 5 years for the purpose it was acquired for be returned to the original owner. The other big divergent view is that the farmer union representatives want in the land bill is that the assurance landowners are paid at least 4 times the value of the land acquired. The land ordinance has in fact capped the total compensation at 4 times the cost of land. Here are a few voices.
किसानों की राय लिए बगैर कोई भी भूमि अधिग्रहण नहीं होनी चाहिए। साथ ही साथ जो मुआवजा है वो चौगुना मिलना चाहिए और जो इरिगेटेड लैंड है वो कतई नहीं लेना चाहिए। अगर रक्षा का मामले में अगर लेना चाहती है सरकार तो हम तैयार है, लेकिन बाकी किसी और कारणों के लिए हम नहीं देंगे।
देखिए, हमारा बड़ा सीधा सुझाव था और कहना था, आज दूसरी मीटिंग हुई उनके साथ, कि आज केवल किसान को बेवकूफ बनाया जा रहा है हर लेवल पर, और किसान सम्मान चाहता है इस देश का, न कृषि प्रधान देश का सम्मान चाहता है। उसका कंसेंट किसी हालत में उसका गायब नहीं होना चाहिए। उसकी मर्जी हो दे, उसकी मर्जी नहीं हो नहीं दे।
उन्होंने काफी अच्छे सुझाव दिए हैं और रचनात्मक रवैया उनका काफी है और सरकार की अप्रोच में और उनकी अप्रोच में जो अंतर है वो बहुत कम है, और इसलिए जो उनके सुझाव आए हैं मैं जो कंसर्न विभाग के मंत्री हैं उनको भेजूंगा और उनसे बात भी।
Well, despite what the finance minister says that there seems to be an agreement between what the farmers' unions are demanding and the government, it doesn't seem to be the case because consent is the controversial one, the government not willing to dilute it, and farmers they're demanding that acquisition without consent is not acceptable. Now the stocks of Vedanta and Kane India were buzzing in trade once again today. Vedanta shot up yesterday after CNBC TV 18 reported news of that potential merger. The company confirmed today, and Kane India rallied after taking a beating last session. Sources tell CNBC TV 18 boards of both companies will be meeting on the 14th of June. That's Sunday. So Nantara, A, it's going to be a working weekend, but B, can we expect the climax?
Well, we'll perhaps get an announcement on what the contours of the proposed merger are going to be, but yes, a working weekend. The boards of Kane India and Vedanta expected to meet independently in Mumbai to chalk out perhaps what the swap ratio is going to be by when they want to try and conclude this proposed merger as well. Yesterday, Vedanta Resources had taken out a press release on the London Stock Exchange where it said as part of a consolidation exercise, not only Kane India, but it was also looking at a reverse merger with Hindustan Zinc as well as Balco. The government holds 29% stake in ITZL and 49% in Balco. We've not been able to confirm whether at that Vedanta board meeting on Sunday, this reverse merger with Hindustan Zinc and Balco is indeed going to take place or not, or if that is going to be the second phase of the consolidation exercise and the mega restructuring at Vedanta. Minority shareholders' views are going to play a crucial role in that proposed merger going ahead, and we understand Kane Energy, of course, has about a 10% stake in Kane India. Don't forget, Kane Energy is the former promoter of Kane India. It's been battling a $1.6 billion tax case with the Indian Tax Department and is not allowed to sell any shares in Kane India. Sources working on this transaction, however, point out there should not be an overhang. This should not stop the merger because Kane Energy is going to receive shares in lieu of Kane India. That's going to be in Vedanta, and if the government wants, it can lock down Kane Energy's presence in India by not allowing it to exit Vedanta. So that's the latest as far as we're picking up on the proposed merger.
Well, speaking of Kane and Vedanta, we understand, and this is information putting out from Reuters, that Kane India has invited bids from global companies to export oil despite the government ban. The government retains a ban on the export of locally produced oil to Kane India. Has also invited initial bids from global companies for Rajasthan oil export.
I think we should perhaps not read too much into this because they have been doing this periodically for about a year and a half, every 6 months.
All right, so let's not get too excited by that, is what Nantara is trying to say. But here's the latest in the Maggi controversy. After the Singapore government yesterday, the state government of Haryana has given a clean chit to the instant noodle. The Haryana food regulator has said that there is no presence of monosodium glutamate either in the noodle or the taste maker. The lead content is also within permissible limits. On the other hand, sources tell Network 18 the company has asked 500 contract workers in Goa to not report to work. Nestle has clarified, saying there is no impact on permanent employees and service providers are trying to redeploy the contract workers elsewhere. Nestle also went on to say that no Nestle employee has been told to stay away from work But that's the latest there. So good news perhaps coming in from the government of Haryana, where we understand that a clean sheet has been given to Maggie. Moving on, Tata Steel has informed the stock exchanges about the impending strike at the UK plant. Joining us now to talk about that is Stephen Kinnock, a member of the British Parliament, and more importantly, he represents Avon. That is the area where the Tata Steel plant is situated. He's the MP of that area. Mr. Kinnock, appreciate you joining us here on CNBC TV 18. Let me start by asking you about the situation which seems to have reached a deadlock at this point in time. Any hope that we could see a resolution anytime soon?
Well, what I would say is that the Tata Steel steelworks in my constituency is absolutely critical for the economy, for jobs. It's the beating heart of the community. 4,000 directly employed, probably 12,000 through the supply chain. So it's critical that Tata Steel and the trade unions do get back to the negotiating table and find a constructive and positive way forward. My understanding is that Cyrus Mistry, the CEO of Tata Group, has written to the Prime Minister saying that he appreciates how important it is for the steel industry to continue to build and flourish in the United Kingdom, and that he'll be doing everything that he can to get everybody back around the table. So there seems to be some hope of the impasse being broken, but of course it will require the management of Tata Steel to come with some flexibility and in good faith.
Right. We also hear that the unions say that talks are still underway. In fact, that there is an impasse with neither side willing to relent at this point in time. What is the indication that you're getting?
Yeah, I think that has happened, and that's very, very unfortunate. And I think the trade unions came forward with a number of proposals for compromise, some flexibility potentially around the retirement age, around changes to the pension scheme, which would have made it easier to make that shift to a defined contribution scheme from a final salary scheme. So I think the trade unions actually showed quite a lot of flexibility. Unfortunately, that flexibility, as I understand it, was not reflected on the side of management, but I'm very pleased now that we have Mr. Carl Kohler, who is the European CEO of Tata Steel, coming to Parliament tomorrow to meet the all-party parliamentary group on steel, of which I'm a member. It's all of the MPs who have large steel interests in their constituencies, and I'm looking forward to hearing from Mr. Kohler exactly what is now on the table. What we've seen is that there was an absolutely emphatic result in the ballot that was held of the employees of Tata Steel across the country. In my steelworks, 85% of the workforce voted, and 95% voted in favour of some kind of industrial action. So I think Tata Steel now knows that the workers are not bluffing. This is an issue that really matters to them and to their families and to their livelihoods. I think they're making the point that steel is a hard business, and when you've worked for 30 years doing 12-hour shifts and you've made your plans around being able to retire at 60 after very tough physical labour, to then be told you need to extend for another 5 years is a very difficult message for a lot of people to comprehend, and I think also raises big questions about health and safety. I think there are certain jobs in certain heavy industry where you get to a certain age and it's just not right to continue.
Well, that's an important comment you make, that Tata Steel should realize that unions are not bluffing. Now, some time ago, 500 workers were laid off by Tata Steel. Did workers recognize that the company has to do that because there is a limited leeway? Some compromises are necessary, isn't it, given the fact that this is a difficult business and going through a difficult period?
Well, look, I mean, if you go back 15 or 20 years, there were 20,000 people working in the Port Talbot Steelworks. The fact of the matter is that technology has moved forward enormously over recent decades, and that is inevitably having an impact on the number of workers that a company like Tata Steel actually needs. And automation, greater technology, certain aspects of deindustrialization have led to an inevitable decrease in the number of workers. However, I believe that what we have now is an excellent balance in the Port Talbot Steelworks between being lean and efficient and productive, maximising the use of the technologies. I really welcome the fact that Tata Steel has invested in the Port Talbot Steelworks. We have a new blast furnace there, new investment in the rolling mill, great investment in an off-grid energy generator, which is going to save the company something like £25 million a year off its energy bill. So there's a great future for the steelworks. Of course, everybody has to be flexible, and I think the workforce in Port Talbot recognises that some of these big changes that I just talked about have an impact on the kind of requirements in terms of the workforce that the company needs. But what's very important as well is those workers who are there are treated in a fair and equitable manner.
As an MP representing that region, let me ask you, are you personally prepared to step in to mediate a truce to try and resolve this crisis?
Of course. I mean, anything that I can do to help. The steelworks is the beating heart of the community and of the economy that I'm very proud to represent as the MP for Aberavon, and I will do whatever it takes. I personally have a background in business. I worked at the World Economic Forum for a number of years, and I've been engaged with business for much of my career before becoming an MP. I understand how tough it is to compete in a highly competitive global marketplace, but I am also very much seeing this from the point of view of a hard-working and highly productive workforce. I think that the community union, which is the main union for the steelworkers, of which I'm also very proud to be a member, have always been a very pragmatic union and would never threaten industrial action unless it really and genuinely was a last resort. So I'm very hopeful now with this letter from Cyrus Mistry to the Prime Minister and some other developments that are going on behind the scenes that we're going to get a compromise and we can get back to business.
Right, my final question to you, are there other consultations underway behind the scenes that could perhaps augur well for the company and help it resolve this current crisis?
I believe that the management of Tata Steel understands what a very clear and emphatic message that vote, that ballot sent, and it's clear now that there are no bluffs in this game. This is a genuine negotiation, and I think that has had an impact on Tata Steel in terms of the way that they're thinking about this dispute, and I certainly think that the leadership in Mumbai is very keen to avoid this becoming a big political hot potato. I hope now that the management in Europe will listen to the messages from Mumbai and take a more conciliatory approach than they have until now.
Well, we do hope that there is a resolution. Mr. Kinnock, appreciate you joining us here on CNBC TV 18. That's Stephen Kinnock, the Labour MP of Aberavon, where the Tata Steel plant is located in the UK. Remember, the union has threatened to go on a strike from the 22nd of June. But moving on, Surana Solar was one of the stocks in focus today as NSE data yesterday indicated, and I quote, a Rakesh Jhunjhunwala had bought shares in the company. But is this the real Rakesh Jhunjhunwala or a case of mistaken identity? CNBC TV 18 investigates. Varinder, so is it the real Rakesh Jhunjhunwala that invested in Surana Solar or not?
Well, thank you so much. The first point which came to everyone's mind in the morning was that, Rakesh Jhunjhunwala buying in Surana Solar, that was very surprising indeed. Of course, if you just see the NSE data which came yesterday, it pointed out that Rakesh Jhunjhunwala, the namesake, actually bought 2.5 lakh shares of Surana Solar. Our investigation, CNBC TV 18 investigation, actually reveals that it is not the real Big Bull Rakesh Jhunjhunwala buying 2.5 lakh shares in this company, but it's a namesake who have bought shares in this company. Also, we learned that the block deal was done at Sunflower Broking, which is a Rajkot-based firm, and this fake or the namesake Rakesh Jhunjhunwala is a Kolkata-based client and has opened his account in the last 1 month or so. Now, clearly there is nothing wrong in the entire procedure, but if you just see the volumes, that were very, very shocking for many of us, and especially for the retail clients. This stock, on average does a volume of nearly 2 lakh shares, but today if you just see the volumes on BSE and NSE put together, they were nearly 80 lakh shares. 80 lakh shares, nearly 40 times 10-day average. That was massive, and clearly if you just see the stock, intraday, it came nearly 35% from day's high, clearly suggesting you that there was someone who was playing mischievous in this trade, wanted to just move out, after doing all these tricks of putting namesake Rakesh Jhunjhunwala there. Now, this raises some questions, and I'm sure, that the system has to be corrected and will be looked on it. But the way all these things, entire things happened, a very serious warning to some of the retail investors that they should not blindly just jump onto something, which a big investor may have bought it. Check the financials of the company. That is very important. This stock corrected nearly 35% from day's high, and that is very shocking.
So, always do your due diligence before investing in a stock. The curious case there of Rakesh Jhunjhunwala, not the Rakesh Jhunjhunwala that we know of, investing in a company that took its volumes 4 times higher on a trading day like today. Now, it's time for us to say goodbye to you on this edition of India Business Hour, but we'll be tracking all the action in the markets, policy and corporate world. Till then, from all of us here, goodbye. Thanks for watching.